Questions on the back of this. First, are we going to trust this data, and will it give us any clearer idea of when this taper is going to come?
I think that the vast majority of the data that's going to be coming through over the next week is going to be viewed as tainted, and I'd be very, very surprised whether it's going to massively move Fed thinking. I was very drawn by some of the comments from Richard Fisher, who is probably the biggest hawk in the Fed and a voting member on the FOMC next year. He said that he thinks tapering is off the table for October. That just leaves December this year. I don't believe they're going to do anything in December in thin markets. I think tapering's a Q1 2014 story.
And what do the markets do in the meantime?
Oh, I think markets just edge higher. I mean, after all, bond yields have rode back quite significantly. We're 40 basis points down on the 10-year US, and the corporate earnings season, at least in the US, seems to be going reasonably well. So to some extent, equities remains the only game in town. But if you look at the global picture, equity total return this year has been about 20% dollar. It's not unlikely that we're going to see a throttling back in the pace of appreciation, and I think the 1 or 2% maybe in the final quarter is probably as much as we can hope for.
Yeah, I mean, and you say it seems to be going reasonably well, the earnings season in the US. We can't really say that about Europe so far, can we?
There's about 10–11% of companies which have reported thus far, and it's a very mixed bag. And so, yeah, I mean, I was hoping to be able to come up with some grand statement today, but there's just not enough data in. I'd have to say that analysts have moved the goalposts quite a long way from their expectations at the start of the year. They were looking for something like 9% growth out of Euro stocks in January. They're now looking for a minus 2%. Handle. So
do you think they're overpriced in Europe, given what we've heard so far and given the outlooks for a lot of these companies?
Sorry, did you say overpriced?
Yeah, whether the market's a little bit overpriced.
Well, I mean, I think the numbers for this year probably aren't going to move very much, but my main concern is the growth that analysts are still programming for next year, and we've been here for the last 3 years in terms of this story. Analysts are looking for 30% growth, and that's basically what is in the price right now. There is the argument that you're buying a lot of cyclical exposure, you're buying trough earnings, margins of 30% below S&P. My worry is that the strength in the Eurozone and the drag you're going to get from a stronger euro is actually to mean that 13% next year is not going to happen.
We've got our Chancellor coming in today here to Reuters. I imagine housing bubbles is going to, I don't know why you're laughing, but I imagine housing bubbles is going to be top of the list to talk to him about. What do you want to know from him?
I'm laughing because I knew what you were going to say. I just think it's absolutely bizarre that he seems to be once again engineering the same sort of economic conditions that contributed to the bust 5–6 years ago. And you have to look at the policy arc from the government, how it's changed over the last 4 years. 4 years they were saying we should be paying off our credit cards. Now we should be borrowing absolutely up to the hilt. We need to build more houses. We don't want to make expensive houses already more affordable. They're back to bubble levels again.